Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Jerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get on with the show. Welcome to today's podcast. We have Francheska, and we were working on her name. Last name is Pimentel, and she is from Rhode Island Providence. And we were just talking about one of our colleagues in our office. His brother had played for the Providence Bruins, and back in 2007 to about 2012. So, Francheska, welcome to the Snowbird US Day Tracker podcast, Snowbird's Expat Radio Podcast. So, welcome, and before we get rolling here, I'm going to ask you the first question is, tell me more about KLR. And today's show, we're going to be talking about international tax and moving abroad. So welcome to the show, Francheska.
Thank you, Gary, first of all, for having me. It's a pleasure to be here. What can I say about KLR? So KLR, we have offices in New England as well as in Switzerland. We offer tax, assurance, and advisory services from the U.S. side. And as a member of the International Tax Services team, I specialize in helping clients navigate the cross-border tax issues, primarily focusing on individual taxes. I have 15 years of experience as a CPA, and I started my career, surprisingly, well, not surprisingly, but I started my career in New York. I've been living in Rhode Island, transplanted to Rhode Island when I moved here when I was 8. I decided I wanted to try out something different, so I started my career out in New York. From New York, that took me to Belgium. So I have been in the shoes of many of my clients, being an expat myself. So I understand the pain points and the complexities that are involved when you're dealing with multiple tax jurisdictions. What does that mean from a personal level? And before Belgium, I also did a little smaller stint in France as well. So that has really given me that depth to understanding their situations at a more macro level.
Well, that's a great point you make, because I'll tell you something. I live in Vancouver, Canada, but we spend a lot of time in Maui, and we've gone through the E2 visa process. And I'll tell you something. You can learn a lot of things on paper, but unless you're starting to take those steps in clients' shoes, it's a whole different experience. And there's a lot more compassion you can bring to the table because of the uncertainties and the difficulties. So that's great to know. You know, when we talk about today's podcast, Moving Abroad, I'm reminded we had a guest on our show. His name was Alex Doylis, and he wrote a book called Take Your Money and Run. And it was so entertaining. This guy basically left Canada in the early 80s, moved abroad. I believe he settled in Dublin, took on his residency in Dublin, exited Canada, and he basically put himself in a better position from a tax perspective. But I don't know if we're going to do that, because this is very, very complex. But so let's jump right into the questions here. So what's the first thing that people need to do when they come to Francheska and say, I want to move to whatever that country may be? How do we get going on this?
Yeah, so I start asking a lot of questions. I feel like you need to ask a lot of questions in order to really understand someone's overall picture, as that would give me a better insight into what they're planning, what their goals are, and what to really look into. But the first question is, how long are you going to be in your destination, the country destination? Are you going there for less than a year? Are you going there for more than a year? What's the immigration status? What's the purpose? Is this just for pleasure? Is this for business reasons? What's really behind it? What's driving it? And then what's the end side goal? Like, all right, do you have plans to come back? If assuming this person, let's just say hypothetically speaking, they are a U.S. person moving to Canada, do you plan on coming back? If you plan on coming back, do you plan on coming back to the same state? If there isn't a state income tax, all these things have to be considered when someone is considering moving overseas, or vice versa, moving into the United States as well.
Do you have a lot of folks that you're dealing with that actually moved to Canada?
Yes.
From the United States to Canada?
Yes. So I was actually, funny enough, yesterday I was speaking to an attorney who said just she's also seeing a trend, at least on our end, we're seeing a trend on Canada, US, Canada, back and forth going on. It seems to fluctuate between countries, but there has definitely been an uprising in the Canadian immigration from both coming in and out. So that's very interesting.
Now, do you find that these Americans that are moving to Canada or the Canadians moving down south, do you find that what is the motivation? Is it one thing? Is it half a dozen things?
Yeah, yeah. So I was speaking to one client who has a home in Massachusetts, has a home in Canada, and I was like, why Canada, right? He's originally from the UK. What's the drive in Canada? He said he grew up in Canada. So there's a personal aspect to it, right? And he doesn't quite know yet if he's gonna retire in the US or if he's gonna eventually go back to Canada and make that his home. Right now he splits his time half and half. I've seen businesses, Canadian owners of businesses in Canada opening up over here branch of subsidiaries to their companies. So they're moving to get that firm up, that business up and running. That's also been happening a bit on that side. And it is quite honestly easy if you think about it from an immigration perspective, or easier, I should say. Like, you have we share borders, so it's very easy to cross back and forth, or easier than it would be from someone coming from Europe into the United States.
Now, so when a person does decide that they want to move to another country, what is involved in that move? Like, what's the first thing like? I know you asked a lot of questions, but are those people halfway through the process when they come talk to you? Is that
Me.
usually what happens?
So I wish they would come to me before they initiated the move or before they moved to the US. I would say it's more on that they come to me after the fact. So when that happens, honestly, we could do advice. We can advise them as far as like, what are the tax planning opportunities that could still be taken advantage of? What are their implications going to look like from a compliance perspective? Ideally, they approach us before. And why do I say before? Because if they approach us before the move, especially if we have someone that is moving into the United States, there's a lot of pre-planning that we could do, and we can help them navigate those waters alongside with their trusted advisors to ensure that they are set up and they're in the best tax position going forward, especially if they're going to trigger U.S. tax residency. If they're going to be a non-resident, that's a different ballgame. But if they're going to be a U.S. tax person for tax purposes, that's definitely something worth considering as far as like what opportunities are there. Vice versa, if we have someone that is moving outside of the United States, an expat, they're going to be overseas for more than 12 months and they're going to be in a long-term assignment, or it's going to be a long-term move. What does that mean for them? What can we take advantage of in order to reduce their tax exposure as much as possible? From like if they have, let's say if they live in Massachusetts and they have kids, the kids are staying behind. Yeah, is still dependent. What does that mean for them if they wanted to break domicile in Massachusetts and the child or the son or daughter goes to a in-state Massachusetts tuition and they get that tuition, right? Well, if they're no longer a mass resident, that's a problem, right? For that in-state tuition. So there's a lot of factors that have to be looked into and considered.
Do you find that these people that are moving abroad, have they tried to educate themselves to understand if there was a treaty between the United States and the country that they're moving to?
Some of them, yes. Some of them I've seen, they go on the IRS website and they look for examples, and they're very smart. They're like very astute. They come to me and they're like, well, I ran into the treaty, or there's a foreign tax credit I can take advantage of. Others, is an afterthought for them, the tax considerations. But the ones that are in advance, like, are searching for these things in advance, normally sometimes it might be that the employer is prompting them, hey, you need to seek competent tax advice, or is part of their, as if they were being relocated through the employer is offering those services as part of their package. They come to us earlier on because they need that advice.
One thing that we find is that people love to go onto the internet and stretch their retirement dollars and say, you know, I've got $1 million. Maybe in the United States and Canada, it wouldn't be a lot of money. But I moved to this little town here in this foreign country. Do you ever see that? Are people trying to, take
Yes.
that bite and off the internet and stretch their retirement dollars?
Yes, absolutely. And I mean, there's, like you're saying, there's a lot that has to be considered. At the end of the day, if you're a U.S. person, a U.S. citizen, a U.S. green card holder, you're going to be taxed on your worldwide income, irrespective of where you reside. So that's consideration number one. Consideration two, if you're moving to that lower taxing jurisdiction, but the income sources you're receiving are still subject to tax in the U.S., you're still going to pay the U.S. taxes. Depends, obviously, if there's an income tax treaty that, may negate some things on the other country. But at the end of the day, if it's U.S. source, you have to be mindful that there is still going to be a U.S. tax filing obligation. And it's not quite honestly going to negate you having to file a U.S. tax return.
So that leads me to the next questions. You find that people are finding these little beautiful little hideaways, retirement hideaways. With the first step is to move there. The second step is to renounce. Is that common for a lot of folks?
So you renounce U.S. citizenship?
Yeah, so you don't have that
So,
tax
yeah.
filing obligation.
Yeah, so it wasn't, I want to say a couple of years ago, barely, touched on renunciation. The past 2 years, we've been dealing with a lot of renunciations. It's cyclical. And at least I've seen this in my career. It seems to be cyclical. What, drives it somewhere because they know they have some sort of significant tax event coming up and they want to mitigate their U.S. tax exposure. I've seen that happening. Others, like you're mentioning, they want to retire overseas. They are okay with not coming back to be living in the U.S. on a long-term basis. They're okay with just entering the U.S. on a temporary basis as a visitor. In those situations, I've also seen that occur. And
Now,
long-term expats too. That's where I've seen it quite frequently lately. They know they've been overseas for more than 20 years and they've made that destination country their home and they're okay with not coming back.
you kind of wonder if there's ever a stat out there on how many people are renouncing and how many people are actually trying to get their citizenship to go from a green card to becoming an American citizen. I wonder if there's a number out there, if that number is equal to the amount of people that are renouncing, the people that are seeking citizenship. Do they ever track those stats?
So there is status on who is renouncing their citizenship, and that's actually public. So
Okay.
you can actually look it up, and there's a quarterly report that it gets issued out every quarter, and it lists out everyone who has renounced their U.S. citizenship or U.S. status,
Numbers or physical people?
like physical people.
Really?
It lists names. Yes.
Oh, that's interesting.
Yeah,
Okay,
look it up. What it.
I'm afraid to. So here's the next question, and this is quite common that we're seeing in our practice on the wealth management side. We have these Americans want to get their PR status in Canada. They're wealthy individuals, and they're receiving income from a LLC. And you must be coming across that as well too, because we know that there's, when we talk about double taxation, and this is the biggest fear we have, is making sure these people, because this comes through the immigration first. Someone says, I love Canada, I'm going to live in Canada. Oh, by the way, I receive $400,000 a year from a real estate limited LLC. What can you do for those people to avoid the double taxation?
Yeah. So in those cases, and I have a colleague that specializes quite a bit in this side of the thing. We talk to them. We analyze the current structure. Is there any potential restructuring that can be done that might be more tax favorable, looking at both sides of the equation? And that's an exercise we'll do in conjunction with their Canadian advisor as well, to make sure that we're bringing the best, solution to the table. Quite honestly, here's what you have right now going on today, but what if we were to do this different structure to see if that would make it more sense in the long term? Because I know, like, if I'm not mistaken, for Canadian purposes, U.S. LLCs are seen, they don't really receive the same treatment that they do in the United States.
That's exactly it. Yeah, that's exactly it. Okay, what are some of the disclosures that if a person wants to leave United States and move abroad or move to Canada, what disclosures do they need to make?
Yeah, if they want to move overseas, so quite often that entails opening up bank accounts because if you're going to be living in another country, you need to be able to have a local bank account to deal with living expenses and the sorts, right? So being mindful that if your accounts in the aggregate, all of your non-US financial assets exceed $10,000 in the aggregate in the year, you're going to trigger what we call an FBAR. That's a disclosure that gets filed with the FinCEN regulations, and that is separate from your regular income tax return filings. Aside from that, you still have to file a federal income tax return in the United States. Depending upon the state the person lived at, they could potentially still have state filing obligations. Could they break residency or not? That's something that would have to be analyzed. But at a minimum, assuming they could break residency, the year that they move, they're going to have to do a part year departing return in that state, right? If they have a municipality as well, that also has to be considered. So, and then in the destination country, you have to also consider, am I triggering a filing obligation in that country? What does that look like?
I'll ask the question, what countries out there that are very, very popular for Americans to move to right now that do not have a treaty with the United States, and how badly does not having a treaty hurt them? So what would be the number one country?
Well, off the top of my head, I have someone in China, right? US and China don't have a treaty. And they've been going through some pain points as far as like how China is taxing some of their things and how we tax, the United States taxes some of their income items, right? So it has been a little bit more of a painful process for that person. Another one, Taiwan. That one also has been coming up on my radar as well. Those have been past 2 weeks to two of the examples I've been dealing with on client situations without a treaty in place.
So China has a flat tax. The Chinese people pay that tax, but there is no foreign tax credits or anything.
Yeah, exactly.
Okay, that's interesting. Okay, so the next question is that what tax implications should these Americans be worried about on real estate and investment accounts? What should they be worried about when they move abroad?
Yeah, so if they hold real estate in the United States, if they're going to be renting that out, that's something they definitely need to recognize as taxable income on their returns. If they potentially are considering selling that property, they could take advantage of, if it's a personal residence, for instance, they could take advantage of a home exclusion, and that will allow them to exclude up to $250,000 of capital gains per taxpayer. So if it's a joint couple, that would be potentially up to $500,000 that can be excluded from taxation. One of the things, though, I like to point out in this particular instance, if you're selling a residence and it's your personal residence, or even if it isn't your personal residence, the timing of it matters. Are you selling it before you move or after you move? And having that local advice is very important. How will that transaction be viewed in the country you're moving to? If it's before you move or after you move, is it going to be subject to tax there? And what taxes, right? What tax rates? Because definitely the U.S. is going to tax it, especially if it's a U.S. asset.
So let's say, for example, these U.S. people move up to Canada here, and they stay less than 6 months. They stay less than 60 months, so that when they exit Canada, they only basically, from the time they move to Canada, they're only responsible from an exit tax. The assets they occur over a 60-month, they're not taxed on their worldwide assets when if they move before the 60 months. Is there other countries out there that have that similar treaty that have an exit tax on a 60-month schedule?
Yeah. So exit tax is, I don't know the exact numbers, but exit tax is popular. I know this. Singapore has one. I've had clients who've dealt with exit taxes there. Germany also has one, and they're actually, as of this year, I attended a conference and they're redoing their whole exit tax scheme. So that's something to also be mindful of. The UK, as we know, they're going through some changes there, as far as like when someone goes from a non-dom to a domicile status, and the exit tax also implications if they're there for more than 10 years. So there are numerous countries, including Canada, that they do have to be mindful of that, of those assets they hold and what happens when they leave, and how long will it take to trigger that. Like in the US, if you're a green card holder, after having the long-term green card for more than 8 years, you're triggering, right, those exit tax obligations. Whether or not you're a covered expat, that's something else. You'll have to go down the different tests to determine that.
Do you find that some people go down this road of working with yourself and saying, try to do the planning, and then basically realize that it's so difficult for them to move abroad that they just say, maybe we'll just spend 3 or 4 months a year over there? Does that happen?
That happens. It happens not as often because, I think you have to start with the premise. I always tell clients, don't let the tax situation be the driver, right? Especially if you have a business opportunity, don't let the tax factor determine how long you have to be over there for business purposes. Should you be educated on the topics? Sure. But there are ways to mitigate or reduce as much as possible the tax exposure.
We do the same thing, but we say, don't let the tail wag the dog. We use that expression a lot up here in Canada. What resources or professionals should you consult to navigate international tax effectively?
So you should definitely consult a U.S. accountant, a local accountant to the country, wherever the country is that you're considering moving to, a financial advisor, and an attorney, all who have had previous exposure or are knowledgeable on the cross-border issues, right? International tax issues. I often find sometimes clients that they'll, they will talk with us, they'll engage our services, but when I ask who's your advisor in that country, they just hire someone based on someone else's recommendation who's a local in the country, but not realizing that that person may not be knowledgeable on the cross-border issues and what does that truly mean, how to make sure that those two factors are being taken into consideration.
Sadly, we see these financial advisors are kind of driving, kind of steering the ship for these clients and trying to find them ways so the advisor can continue to work with them and maybe not be 100% compliant from a regulatory point of view. Maybe that client, American, moves up to Canada. They can't continue to work with their existing advisor, but that advisor will tell them, don't worry, you can use your parents' address or your neighbor's address. And we know that tax, the regulatory issues they get into from a filing point of view. I guess outside of international tax and what else KLR is working on, what else do you guys find that your firm specializes in?
So we specialize in, we do non-for-profits, for instance, audit is a bread and butter. In the tax world, we have SALT issues, we assist individuals with that, corporate tax, you name it. And so basically, whenever I have this client situation that entails different sides, I make sure I get the right team in place to make sure that we're providing a holistic approach and overview to the client to make sure that they're covered.
Now, do you have your clients asking a lot of questions as we go into this president race? Do people ask you a lot of questions? If it's a Harris Democratic presidency or a Trump presidency, is there anything that you guys are doing right now, planning? I guess people can say that, it's a pick'em race, so this is probably the most difficult race that we've seen for a while. But how do you advise these people when they start asking political questions?
I don't go into the political aspect of it, but I say we're due for a major overhaul, right? At the end of 2025, but the current TCJ expires December 31st, 2025. In 2026, we don't know what the tax landscape is going to look like. That's being honest. So some things that we've told clients that they might want to consider accelerating certain incomes, while we know what the rates are and they're lower, because if they go higher again, that's something that they definitely need to be mindful of. From the state tax lifetime exemption, right now is in the $13 million range, right? If it goes back down to the 5 million plus inflation, that would put them at $7-something million. So being mindful of, definitely, that's one of the things we've definitely been advising clients to. Please make sure you go and you speak to an estate tax attorney and getting a plan in place. If you don't already have one, revising the ones you have to make sure you use it, you take advantage of that.
That's interesting. Well, I know that we don't take a political stance on who we think is going to be better, but we do discuss. We have a full-time Washington correspondent, Ed Mills, that works out of Washington. So I do find it very interesting. And of course, Canada, we're going through the same things. We could see a replacement from a liberal government to a conservative government. So all we're looking for is, what could be better. And I guess at this stage in life, we're looking for changes that are going to be positive. So, well, I'll tell you what, I really enjoyed our conversation today, and we look forward to having many more opportunities to talk to you about international tax. Before we go, what's the best way for people to get a hold of you?
Yes, you can find me on LinkedIn under Francheska Pimentel. You can also shoot me an email at fpimentel@countlent1.com. If you search KLR, you should be able to also find our firm, and you should be able to find me in there as well under the people section.
Well, we really appreciate your time, and I know it's a lot later in Eastern Canada. It must be about 4:30 your time right now.
Yeah, it's 4:30. Yeah.
Okay, there we are.
Still
Well,
early for us.
that's probably getting close to your dinner time. So thank you very much for your time, and we look forward to meeting you in person one day, and wish you all the best.
Well, thank you, Gary, for having me as well.
Very welcome. Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward the episode to a friend, and please don't hesitate to like, subscribe, or leave a comment. Now, before you go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.